Okay, we're going to go ahead and get started. My name is Jennifer, and I am with University Credit Union, and joining me today is Marquee Johnson. She's at our Bountiful branch, and she's one of our senior MCs, mortgage consultants. And I've got to just kind of collect my thoughts. I'm scattered a little bit this morning, and so if I start when I'm scattered, I'm going to be stammering all over the place. But we want to welcome you and appreciate you joining us. Just a few housekeeping items to cover. If you do have questions throughout our presentation, if you'll just go ahead and type those questions in on the question bar, and periodically through our presentation, we'll stop and answer some of those questions. Our goal today is to help you understand the difference between appraisals and inspections and some of the benefits and values of each independent report. We'll cover some specific things, we're going to cover some general things, but then we're going to open it up and make sure that we answer any of the questions that you might have. So we're going to go ahead and get started and jump right in. And the first thing that we want to identify is the difference between an appraisal and an inspection. An appraisal establishes a formal value, a market value of a real estate property. Those appraisals are typically required when you're involved in any kind of a purchase transaction for real estate, or a refinance transaction for real estate, or if you're doing a new build, so new construction. Those appraisals are required by the investors to establish a current market value. Now, on the other side of things, an inspection establishes condition. An inspection isn't necessarily required by a lender, but it might be required by a potential buyer, or even a seller could provide an inspection report that shows what the existing condition of the home is. And so what we want to do is talk about some of the details of each of them so that it will help you determine which one that you would need in your specific transaction. So next one.
So now we'll cover some basics with inspections. Typically when someone's purchasing a home, they know that it's a good idea to do a home inspection, but a lot of people don't realize when you're selling a home, there's so many benefits that can come from doing an inspection before you actually list your home. It can make the selling process so much smoother because you can identify if there are any potential problems that may come up if a buyer does an inspection, when you're selling, and you can fix those problems before you even list it. It will ensure a smoother and more efficient transaction. It can help your agent more accurately price the home for sale if you've done major improvements, or if you know that there are things that you don't want to fix, you can adjust the price accordingly. It could save you money if you fix things yourself versus if a homeowner asks you to fix it, or if they offer you less because they know it's something that they're going to have to fix. It'll make you more trustworthy if you can show a buyer what you fixed and address everything, and it can help you market the home if you've fixed problems that have come up, whether it's major problems like a new roof or little things. It'll definitely help with marketing the home.
So we're starting to see that a lot more often with sellers stepping in and doing inspections on the properties prior to, just because, again, like Marquee addressed, it really gives an overall smoother transaction. And so just so that you know, we really do see that coming more and more prevalent with sellers on the market. Now, buyers, for buyers, it really helps detect problems that they might not see on the surface, but problems that could become worse over time. So it really gives you an opportunity to inspect the property, know exactly what you may be seeing and maybe what you wouldn't be seeing. It really helps you have a better security, the safety of the home. You know that if there are issues that are to be addressed, that you can address them prior to closing, and so it does give you that increased safety feeling. It also ensures that you don't get surprised. You really know, again, you know what you're getting. There's the transparency of knowing exactly the condition of the home. Now, inspections can range anywhere from about $300 to $600, depending on the types of inspections that you do. There are some specialized inspections, more like that you hear periodically, meth and radon inspections. There are a host of different inspections. Those are just a couple, but those inspections can get quite pricey when you start adding some of those additional ones. There's some foundation inspections and stuff like that that get quite pricey. But really, an inspection can pay for itself over time, especially if you detect issues. It really does pay for itself. And the biggest thing is that it really does provide you peace of mind and confidence that you are buying exactly what you want, that there are no things that are hidden or no surprises later. And it really does help you plan ahead. If there are some certain things that need to be addressed maybe in 3 to 5 years, you can plan. Sometimes things like that would be like furnaces. If you have an inspection done and they say the furnace is in great working order, but it'll probably need to be replaced in the next 5 to 7 years. It gives you an idea of what anticipated expenses you could have, and it gives you an opportunity to plan ahead.
So now we'll talk a little bit about appraisals. So first, when do you need an appraisal? Typically, the main times you'll need an appraisal is if you're purchasing or refinancing. Most lenders will require an appraisal. We do require appraisals on the majority of our refinances and on all purchases. You could also have an appraisal done if you're wanting to remove private mortgage insurance. That doesn't go for all lenders. Not all lenders will allow you to do that to remove it, but here at the credit union, if your value has increased over time and you want to have an appraisal done to see if you have enough equity to remove your private mortgage insurance, we will work with you to order a new appraisal. And then if you're doing a home equity line of credit or a second mortgage, we may or may not need an appraisal for that as well. We would determine what we need. And then with who orders the appraisal, the lender will always order the appraisal. That's not something that you would do on your own unless you were looking to sell your home and wanted to get an independent appraisal before you list it. That would typically be the only time that you would order one on your own. And what does it tell you? Jennifer already covered this, but it does tell you the current market value based on current comps for your home, and current comps would be typically within the last 3 to 6 months.
So Marquee, what happens on this? We've had a couple of questions that have come up over the years on this. What happens if you go to list your home, you want to sell your home, and you see that, or you've heard that a neighbor a couple of streets over sold their home for, significantly higher than what you thought the value of your home was? What happens? How do you know how to identify? Like, if they sold their home for $600,000 and I want to sell my home for that, doesn't that mean that my home is worth $600,000?
We get that question all the time, and people will say, my next door neighbor sold it for that. Just because they live near you or they're your next door neighbor, it does not mean that their house is necessarily comparable to yours. It doesn't mean that it would be used by an appraiser. It could be a different home style. It could have different square footage. It could have, more bedrooms or less, different acreage. And that's why it's important to get a professional appraisal done rather than just rely on, oh, my neighbor's home sold for this, because it may not. And it may be a comp, but that's why you need to have a professional look at it, because it's not always a comparable to yours.
Okay, we do get a lot of those questions. So next, we're going to have you go to the next one. So what responsibility does the appraiser have? So the appraiser is really responsible for basing their decision off of actual market sales. So just because a home is listed, it may not fall into that category where they can utilize that. Now, an appraiser, if most of the situations when an appraiser does a report, they use current closings, but then they also use a couple of current listings to show what homes are currently listed for. And then they go through and analyze and give us a report based on the analysis of those market information. Now there are restrictions on those on that information. They can't use sales that are over a year old. They have to stay within a certain area. They try and stay within a certain mile radius. There are a lot of conditions that are on appraisers to make sure that the report that they give us is actual recent sales. Now, just because a home is listed for an amount doesn't guarantee that the appraisal is going to meet that same purchase price. So we've had a couple of situations where the market value or the sales price has been one thing and the actual value of the home has come in lower. In some cases, it's come in higher. In any case, what we do is we make sure that we go through that appraisal and we analyze that information. The appraiser works closely with the real estate agents to see what they've utilized to try and establish value. So the report overall is an in-depth analysis of all of those different variables. And once they're finished and done, they provide us with that appraisal report. Now, we get asked from time to time, what adds value to a home?
All the time.
and there are so many different things. So I'm going to have Marquee cover a couple of things that she likes to see.
Yeah, I think a lot of these are self-explanatory, but we'll touch on a few of them. So landscaping can obviously add value. I think that's a pretty basic one. Now, when it comes to the kitchen, we've actually talked to a couple of appraisers just to go over, you know, would it be more beneficial to totally gut my kitchen or just do kind of a facelift, you know? And they've said that, you know, if you go to the extreme and upgrade everything to the highest upgrade, you will not recoup all of that cost. But if you do just like a nice, you know, facelift, you can recoup more and make more on your dollar with that. So even just the basic upgrades with a kitchen is very beneficial.
And really what they've addressed is it's just having it in very nice condition.
Yeah.
They didn't talk about the inside of the box of the cabinets.
Right.
They talked about just making sure that overall that it was very well presented.
Yeah, not the top of the line.
Yeah.
That's not going to get you any extra, you know. So that is one huge thing that can add value to your home. Bathrooms, rec rooms, you know, all of that. Like I said, I think a lot of these are pretty self-explanatory. Are there any that you like that you want to cover?
So there are some things that we get asked. You know, roofing is a really expensive upgrade. It's one of those things that when you buy an older home and you have to re-roof the home, it can be, you know, in the tens of thousands. It can be, you know, $12,000, $15,000, $18,000 depending on the size of the roof. And those, we get asked all the time, well, we're going to sell our home and we just put a new roof on it. It should be $12,000 higher, or it should be $18,000 higher. And that's kind of one of those things that it's just a given. It should be on the home. It should be in good condition. And you're not going to necessarily recoup dollar for dollar on those improvements. Same thing with solar panels. We get asked from time to time on solar panels.
Yeah.
You know, we just spent, you know, $36,000 on solar panels, and our home value went up $36,000. And a lot of times the answer is no. Unfortunately, solar panels don't guarantee that you're going to increase your value of your home by the amount that you paid for them. They're kind of one of those amenities to the home, or just it's typically expected, like the roofing and the windows. Those things are typically expected. It's not an addition that's going to add a lot of value to it.
Yeah, there's not necessarily comps that would be available because solar panels aren't as common as, you know, other things. So it's hard to add a lot of value when there's not all of those comps to compare it to, you know.
That is the biggest thing. You know, the basement, those finishes, all of those things come down to what are the comparables in your areas going for. And so when you buy a home and you're looking at doing some improvements, or you're looking at, you know, just trying to maybe update things, you really need to look around in the surrounding area to see what you're gonna anticipate as far as an increase in value. Whatever the comparables are doing, that's exactly what you're gonna recoup, because the bottom line is when it comes in, if we don't have comparables that have solar panels, they're not gonna give you any extra for it.
Exactly.
Those are really kind of the bottom line. That's really, it's sad when you say, sorry, you can spend all this money.
I know.
But the comparables govern so many things, so many of the values that we can use. So how do you prepare? How do you prepare for an appraiser or an inspector? So we have really tried to help and advise our members and get them prepared for this experience. Inspectors and appraisers are going to look at the very same things. They want to look overall the home and see if it's nice, if it's clean. They want to receive the list of improvements from you. If you've done something special that you want them to know about, they really want you to show them. They want you to explain to them what things you've done in the home. The only difference, the inspector then is going to go a little bit more in depth. They're going to go into working conditions. They're going to go into, you know, check the furnace, check the plumbing, check, you know, foundation. They're going to check the roof. They're going to actually, in a lot of cases, depending on the inspection, they're going to actually get up on the roof and check the condition of the roof. Those are the things that that each one of them are going to do. But then they're going to look at things. What do they see that needs improvement or attention? If you go into a home and you see that there's a hole in the wall, both the appraiser and inspector are going to talk about that. They're going to say, you know what, this is something that needs to be repaired. This is something that needs your attention. And they're going to talk to you about things that they see that are going to need fixing or some kind of a remedy on that issue. So you just want to make sure that you are prepared, that you have a nice, clean, straightened home. Make sure that they have access to everything. Inevitably, people will open up and shove things in closets and shove things in drawers, and then the appraiser comes in and opens the closet door, and they're like, "Oh, don't look in there." But you just need to know that they really are going to open every door and open every drawer and look to make sure that everything is in good working order. So is there anything else that you can think of on that?
That's great.
Okay, next one.
Does the type of loan affect the appraisal? Yes, the type of the loan can affect what type of appraisal is completed. If you're doing a home equity line of credit or a second mortgage, we may or may not need a full appraisal. We oftentimes do what's called a desktop appraisal, and sometimes they may need to come in and do interior pictures of the home, and sometimes they may not. Typically with purchasing or refinance, we will need a full appraisal. Now, if you're doing a government loan, the appraisal is a little bit more nitpicky, I guess. For lack of a better term, they're nitpicky. Just things like if there's paint chipping, you could have to fix that, and just little things like that. Whereas with a normal loan, with a conventional loan, the appraisal isn't as nitpicky as it would be on a government loan. Construction loans is a little bit different appraisal. We will look at the plans for the home, whether it's a new home or whether you're remodeling. They will look at the plans and the cost of construction. So the appraisals will vary depending on what type of loan you're doing.
We try on those HELOCs and seconds, depending on what the loan to value is, we really try and help utilize the tax assessment or an automated appraisal on those in those situations, just because it's a little bit easier and there isn't as much risk involved. And so we try and utilize those types of appraisals on those. We get asked from time to time, does the appraiser really have to come inside my home? And the answer really is yes.
Yeah, they do.
We really need to see that the home is in good working order, that everything is in good condition, because that is the security that we're taking to insure the loan.
Yeah.
So the answer is yes. We do get asked all the time, do they really have to? Yes, they do. So should I remodel or sell? That is a really good question. Marquee, what do you think? Should people remodel or sell?
I don't know. It depends on the person.
So that really depends on what your end goal is. There are things that we've had a lot of our members come in and say, we really love our area. We just are not in love with our home anymore. We've kind of outgrown our home, but they don't want to change their area. And so we've had a lot of our members choose to do a complete remodel. Mm-hmm. And we love those. We love working with our members and seeing that home transformed into kind of its second life. But also, we do have a lot of members that have come to us and said, we've simply outgrown our home, literally, and we can't fit in our home anymore, and it's time to move on. And so it really depends on your situation, what you're looking at. If you're in an area that you love the area and you really want to look at the option of increasing and changing your home and upgrading your home, we would love an opportunity to help with you. We would also love an opportunity to help you find that new home. So either way, just counsel with us, reach out to us, and let's look at some of the options that exist, and we'll help you kind of answer that question for you. So why us, Marquee?
Why us? We love our members, and we love working with you from start to finish. Your loan officer that you work with will hold your hand throughout the entire process. You start with one person, you work with them the entire time. You don't get passed off from person to person. Now, we do have a support department that will help us get your file through underwriting and processing, and they're amazing, but we will be involved through every step. And I think that's really valuable, because a lot of lenders, you start with one person and then you get passed off and you never talk to them again, and that can be discouraging. We will sit down with you and we'll help you find the best options for your situation, and we will be completely honest if we don't think something is a good fit for you, we're not afraid to say it. We want you to get into something that is good for you and good for you long term. We'll look at your entire financial picture to make sure that what we do for you today will still work for you tomorrow and in 5 years and 10 years. We're local and we have in-house originating, processing, and underwriting. We don't farm any of that out to third-party companies, which is huge, and it speeds up the process, and just the communication is a lot better having everything in-house. We provide automated updates. We just love our members, like I said, and we'll do everything to earn your trust. And like I said, we will be completely honest and transparent throughout the entire process. Do you have anything to add to that, Jennifer?
So, I think the most important thing is that we really do want to look out for what's best for you. Yeah. And so there are a lot of times that, we get calls from our members that are saying, we've purchased a home at, this builder, and they've referred us to an in-house lender, and we really want to do a comparison, and we'll help them through. And we're the first to tell you that, if ours is a better situation for you, we'll advise you that way. And if it's better for you to go with the other lender, then we'll tell you that. Yeah. And hopefully in the meantime, help you capture a little bit better deal. Maybe you'll save a little bit on fees, and we'll say, oh, this looks really good, but you could ask for this. Yes, and maybe help you capture a little bit better deal. So we really do want whatever is best for you overall. There are a couple of other questions that have come up. And so I'm going to ask the question and see if Marquee, we'll just kind of have Marquee address. So if you are a seller and have an inspection and you find something that was maybe big, do you have to disclose that information to the buyer?
Yes.
Do you have to tell them? Like, what happens if I don't tell you as a seller?
Yes, you always want to tell anything that you know, any problem, anything that's been addressed or not addressed, anything that you know of, you want to report on the seller disclosures, because if a buyer has problems with it later on and can show that you knew about it, whether they contact the original inspector or anything, it can involve lawsuits, and it's just, if you're questioning if you should disclose it, yes, always disclose it.
Yeah. When in doubt, just disclose.
Always disclose everything.
So are inspection results the same if a buyer orders it or if a seller orders it? Do they get the same report?
I mean, typically, yeah, obviously inspectors, if it's a different inspector, one may be more thorough than another, but overall, I feel like inspectors are very thorough and would find the same things. Now, if one was a more in-depth, like you mentioned before, there's so many different kinds of inspection, so if one was more thorough, it might turn up more than the other, but overall, it should yield the same results.
Okay. There are a lot of questions that you're going to have, and we're here. We've tried really hard to kind of just give you a brief overview, and I know it was kind of fast. We try and hold these to about a half an hour. So if you do have questions, the most important thing is to reach out to us. Let us help you through the process. I know you found us, you know where the website is at the ucreditu.com, but these are some of our mortgage consultants that you can reach out and contact. If you contact us at the 801-481-8840, it rings at every one of the desks, and so you're guaranteed to get a mortgage consultant when you call. And again, the most important thing is just reach out to us, ask us the questions. We love helping our members, we love working with them. The mortgage department is growing, we've got new faces, and we're excited about the growth, and it just means an opportunity to help more of you. So, but thank you so much for joining us, we appreciate it. And if you have questions, reach out and let us know. Have the rest of a great day.